Hello everyone, welcome to ixamBee. Please don't forget to subscribe to the channel and press the bell icon. In today's video, I am going to talk about one of the important topics and subjects in your PFRDA and SEBI grade exam, which relates to costing. So costing is one of the important subjects which comes in your paper 2 of both these exams. The SEBI and PFRDA exams are very similar except for one of the subjects of pension sector that comes in PFRDA and not in SEBI. Everything else is absolutely same in both the exams. The PFRDA exam dates have already been announced. The phase 1 exam will be on the 5th of November, while phase 2 will be in December. The registration window is still open, so if you have still not registered for the exam of PFRDA, please don't forget to do it in time before the 7th of October. So today's video's focus, so the costing subject is very important and can be very scoring. However, some of the students are scared of it if you are especially coming from the non-financial background. So today in this video, my purpose is to solve certain numericals of costing of one of the important topics relating to the costing subject and help you understand and build your concepts so that you can solve any kind of numerical related to this particular topic. So let's go ahead and understand the syllabus. The most important aspects for you to be covering when studying for this particular exams includes the costing terms and definitions like what is a cost sheet, what is a cost center, what's a cost unit, what is cost accounting, how is it different from say financial accounting or managerial accounting. Such terminologies you should be aware about and know the definitions of. Next you should be knowing is another important topic and concept is marginal costing, which includes understanding of the break-even, the fixed and the variable cost components, other terminologies like contribution, margin of safety, what all they mean, and how it is different from absorption costing. Another important topic is the standard costing and variance analysis, and from your numericals point of view, the break-even, PV ratio, standard costing. So these two topics, marginal costing and standard costing, these two become important. There is also theoretical subjects related to lean systems in the costing syllabus. This can be very scoring and it is theoretical in nature, so this can be very scoring even for non-finance background students. So don't skip this when you are preparing for costing. So let's now move on to the fear area for especially the non-finance students, which is the numericals. So today, as I discussed, I will be talking about one of the topics, very important ones, and usually the probability of numerical coming from this topic is relatively high. So it is about break even and contribution. So what exactly do we mean by break even is actually a point at which the company is not making any loss, neither it is making any profit. So the whole purpose of studying costing is that the company is able to find out what are the expenses and the cost of carrying out their business of producing a product or providing a service. So whichever kind of business they are in, what is the cost of actually producing. This is important because it helps the management and the company to take decisions whether they should produce something or not, whether it is profitable or not, and how should they price their product so that they are able to cover all the kind of costs and also earn a certain level of profit margin. So that's why this analysis, this calculation is very important, right? So break even, as I told you, is the point at which the company is neither earning a profit nor loss, which basically means that the company is being able to cover all of its costs, all kind of costs that they are incurring in producing a product or providing a service, they are able to cover for it. Say for example, there is a company who is in the business of making say bed covers, right? So there can be various costs that could be associated. Say there could be the material that you will need to make the bed covers, there could be the labor, or the tailors who would be doing that, or the machinery that is involved in doing the stitching part, right? So that could be there. There could be final packing or creasing of the bed covers being done, right? So there could be various such costs that are associated. Apart from that, there could be some other kind of costs which are not directly associated with these but are very important. For example, the machine where you are doing the production, it is kept in a building and you are paying certain rent related to it, right? So the costs which are directly associated with the production of the product, these are known as the variable costs. And the costs which are not directly related with the production of the product, however they need to be incurred on a fixed nature, these are known as the fixed cost. So the difference between the two is variable cost varies with the amount of production. So the higher the production, the higher will be the variable cost. Why? Because if you are producing more bed covers, you will need more material to produce it, right? However, no matter how many bed covers you make, the rent will not change. So that is fixed in nature, right? So when the company is making sales of this product to such an extent that they are able to cover for both the variable cost and the fixed cost, that is the point at which the company is breaking even. Of course, as a business, the company would always want to make sales which are above this, right? So first we need to know the level, which is like the minimum level that the company should be producing so as to be able to cover its all the costs, right? So now, having understood the different costs, now if I have to calculate my break-even sales, right? My break-even sales should be in such a manner that I am able to cover my cost, as I said, right? So my sales in that case should be able to cover both for my variable cost plus my fixed cost. So say if that sales is X, right, and my sales price I know is SP, my sales price. So my sales price multiplied by the quantity of X should be equal to my variable cost. Now my variable cost, because it changes and varies with my production, my variable cost will also be multiplied by X plus my fixed cost. Okay, so if I solve for X, what am I getting? SPX minus VCX. Now I'm doing a simple mathematical equation here, okay, which means I can very easily say that my break-even sales is actually equal to my fixed cost divided by my sale price minus my variable cost, right? So this is my break-even sales. I have derived this very easily mathematically. So there is, you should not be afraid of the numericals in costing accounts. Any kind of these numericals are very simple mathematics if you understand the logic behind creating that maths. Okay, so here we have derived that break-even sales is given by my fixed cost divided by the difference between my selling price and my variable cost. Now this terminology, the selling price variable cost, is referred to as contribution. We call it contribution because this is the contribution per product that the company is being able to earn. Okay, so that is known as my contribution. When my contribution is able to cover for my fixed cost, because this is fixed in nature, it doesn't change with the production. So I want to know which level of my production will be able to cover for my fixed cost. When I get this, that is giving me my break-even sales in units. That means in the number of products that I am going to sell, right? So when we are learning, maybe in many books and notes you will find this formula, fixed cost divided by contribution is what the break-even sales is, but we have very easily derived how this has been constructed. let's move ahead. So we got that break-even sales in unit numbers is given by fixed cost by contribution. Okay, if I simply multiply this by my sales price, okay, this will give me my break-even sales in rupee terms. Okay, now there is another ratio which we call contribution divided by my sales, and this ratio is known as my PV ratio. Okay, this PV ratio is another very important ratio in the break-even analysis and marginal costing numericals. Now PV ratio is basically depicted by contribution by sales. Having said that, my break-even sales, if I fit this in, this is actually the reverse, sales by contribution. If I look at this part, it is the reverse of this particular ratio, which basically gives me another formula which is used in the numericals, that break-even sales in rupee terms is actually my fixed cost divided by PV ratio. Okay, so if I have to calculate my break-even sales in unit terms, I divide my fixed cost by my contribution, where both of them are in rupee figures, where rupee figures cancels out and give me the number in units. Similarly, when I have to calculate in rupee terms, this is, I have my fixed cost which is given in the amount form, in the rupee form, and then I have a ratio of PV ratio which gives me the actual answer in rupee terms. So these two become your key ratios to remember for break-even analysis. Now let's further understand what we mean by PV ratio. As I already told you, PV ratio is calculated as contribution by sales. Okay, the full form for PV ratio is profit volume ratio. Okay, where basically we are saying the profitability from the product will be determined by the contribution, and the volume refers to the volume of sales, the unit of sales. Why is this important? Is because as my contribution increases, my profitability will increase, because my contribution, if it is increasing, it will be able to cover my fixed cost more rapidly, right? So I will need a lower break-even point. Okay, so higher my contribution, I will have a lower break-even point, so my chances of profitability increases, and therefore the higher my volume or my sales increases, my profitability will increase. Given this fact, actually PV ratio is very important, because it's also giving a measure of the rate of change in my profit due to change in my volume of sales, and that is why we refer it to as profit volume ratio and not really contribution sales. However, we can also call it contribution by sales ratio, but the most commonly and more commonly used terminology is profit volume ratio, where you are measuring the change in profitability to the change in volume of sales, and that is why it is very important in understanding. Now let us look and try to solve numericals based on these understanding. Now look at this question which states, what will be the BEP? BEP is the break-even point in units. So they are asking us to calculate in units. When the sales price is rupees 40 per unit, the fixed cost is 60,000 and the PV ratio is 40%. Okay, so now I have to solve this. I want BEP in units, right? So my BEP in units can be calculated as my fixed cost divided by my contribution. Okay, now I don't know my contribution as of now in my in rupee terms directly. However, I do know that my PV ratio is 40%. Okay, and I know that PV ratio is equal to contribution by sales, and I know my sales price is 40 rupees. I know my PV ratio is 40%, and therefore I can calculate my contribution, which will be 40% of 40, thereby giving me a contribution of rupees 16. Now I will be able to calculate 60,000 divided by 16, which will give me 3750 units. Now alternatively, you could have also done is, you can first find out the BPE in rupee terms, because that we have just understood that it is fixed cost divided by my PV ratio. Okay, so this will be 60,000 divided by 40%, which will give me 1,50,000. Now I know that my selling price is 40 rupees, right? So if I have to calculate it in unit terms, it will be this will give me 1,50,000 divided by 40 rupees, 3750. So both the ways you can use to arrive at your answers. Either first you calculate in BEP in rupee terms and then from there go back to calculate it unit terms, or you can calculate the contribution in rupee terms to directly calculate the BEP in unit terms. So both the ways are correct. So your correct answer here is 3750 units. Okay, now this is another information that is given to you, and again we are trying to calculate the break even sales from here. Okay, now given this data, what all I can see, I have the sales revenue, I have the total cost, and I have the units sold, right? Now to calculate break even sales, I need to have certain information like my fixed cost, my contribution, and or my PV ratio. So these are certain information that can help me calculate my break-even sales. Now I don't know what fixed cost is, I don't know what my contribution is, I don't know what my PV ratio is. However, there is a way to calculate my PV ratio. We just discussed that PV ratio is actually measuring the change in my profitability with the change in my revenue. So what is my profitability here? If I calculate my profits here, the profit will be the difference between my revenue and my cost. So in the year 2021, my profit is 1 lakh minus 80,000, which is 20,000 rupees. And in the next year 21-22, my profit is 1,20,000 minus 90,000, which is 30,000. Having known this, now I can calculate my PV ratio of change in profit to change in revenue, which is equal to increase in profitability by 10,000 divided by increase in revenue by 20,000, which in percentage terms, if I multiply by 100, gives me 50%. Now this is known to me. I do know that now break even sales in rupee terms is given by my fixed cost divided by my PV ratio. Here I have been able to calculate my PV ratio at 50%. However, I still don't know my fixed cost and break even sales. I do know that I have made a sales of 1 lakh, and this 1 lakh I was able to make by covering my fixed cost and also earning a profit, right? So whatever my PV contribution was or PV ratio was, it was not just able to cover my fixed cost, but also help me earn a profit, right? So giving this information, 1 lakh is equal to, I can very easily see 1 lakh is equal to fixed cost plus at 1 lakh sales, I was able to make a profit of 20,000 divided by 50%. Now if I solve this equation for fixed cost, I will very easily be able to solve it for fixed cost, which will come out to be 30,000. Okay, now I know my fixed cost, I know my PV ratio. Very easy for me to now calculate 30,000 divided by 50%, which will give me rupees 60,000. So my answer here is 60,000. So this is how you will be able to calculate the break-even sales from the data when the data is being given for 2 years, and you have to follow the change in your profitability and your sales revenue to be able to come at the calculation of fixed cost also and your break even also. So if you had to calculate your break even in unit terms, we know that 10,000 units have led to a revenue of 1 lakh. Therefore, my sales price is 10 rupees and therefore my break even sales in unit terms would have been 6,000 units. Okay, I have been able to calculate my fixed cost here. I have been able to calculate my break-even sales. I can also calculate my contribution because I know my sales price, I know my PV ratio. I can always calculate the contribution in rupee terms. So I hope with this video you will be now very clear about the break-even, contribution and PV ratio concepts and will be able to solve any kind of numericals related to these topics and usage of different terminology. In case you get stuck, always go back to your basic maths and you will be able to very easily solve any of these numericals from these topic in the costing subject. There is another terminology I talked about in between. This is known as margin of safety. I have not covered it in this video. I will do it in subsequent videos. However, what your understanding of margin of safety is, please do write in the comments box. I will wait to see your comments and your understanding of what this terminology is and how it is related to break-even sales. So thanks everybody. That's all from our side. I hope this session has helped you to unfold your own potential, because that is what ixamBee aims at by providing you crisp and simple explanation of things to uncomplicate them and help you find your own potential. We have our expert faculty for all kinds of subjects for your PFRDA and SEBI grade A exam preparation, whether it is paper 1 for phase 1 consisting of quant, reasoning, English or GA, or your paper 1 in phase 2 related to descriptive English. We have our expert faculty for paper 2 also, whether it is for general consisting of so many subjects. We'll have experts for economics, for finance, for accounting, for costing, for economics and management, all faculties who will be separately teaching you and not one size fits all. Checked. We also have faculty and courses available for the legal stream, for the research stream, for the IT stream and the Rajbhasha stream. We started with a 100 days plan for SEBI preparation. This month on the 5th of September, we have successfully been conducting these classes, and today is the 25th day of these 100 plan. We have already completed 1/4 of this plan, and the recordings of these are already available in the course. These are also supplemented by pre-recorded videos and PDF notes and chapter test for the students' benefit. If you still want to be a part of this plan, you can avail the Navratri offer that is ongoing as of now at ixamBee. If you are preparing on your own, on our website you will find all previous year papers and various mock tests for both PFRDA grade A exam and SEBI grade A exam absolutely free. So you can practice all these mock tests for free at ixamBee. Don't forget to subscribe to the channel and press the bell icon for the next video on PFRDA and SEBI preparation. Thank you and wishing you all the best.